What are the best royalty and streaming companies to buy in 2025? Well, in this video, I'm going to do a quick overview of a bunch of different companies and give you my thoughts on each one, whether I think it's a great buy in 2025 or whether I'd avoid it. This is not a deep dive like I typically do. This is just a very surface level overview running through each one pretty quickly. These are just my opinions based on my own research, and you should always do lots of your own research before investing any of your hard-earned money. And keep in mind, my opinions can and will change as I discover new facts, as I research more, as facts about the company change. This is just a snapshot in time in December 2024. First up is Gold Royalty Corp. It trades in the US under the ticker GROY, and right now it's trading at $1.24 per share. Gold Royalty Corp has great management. The CEO is David Garofalo. He's been very, very successful in the past, so I really like that he's running the company. Gold Royalty has a lot of growth already built in that they've already bought and paid for, so I really like that. And this is growth that's happening now. They're going to be growing their revenue each quarter going forward, or at least for a little bit. And then, like 2025, 2026, 2027, there should be substantial growth each year for about the next 5 years. So that is really great. Right now, they're spending way too much money on G&A relative to how much revenue they're bringing in, but their revenue is going to grow so much that that's not such a big concern to me. And I think that after people see them actually making a profit and being able to pay down their debt, well, then this stock price is going to go up. And I think that's going to happen soon. I think they're past that inflection point or getting there right now, especially as this Vares mine is ramping up. I said that G&A is pretty high compared to revenue, but they do have an excuse for G&A being higher than other royalty companies. And that is because they have a royalty generation portion of their business, and there's a lot of expenses involved in that. And those are expenses up front that pay off over time, and they're generally very, very good returns in the long run. So I do like that they have that portion of their business. At this stock price, in 2025, I consider Gold Royalty Corp to be a strong buy. This is definitely one that I would be buying. Next up is Wheaton Precious Metals. Trades under the US ticker WPM, currently $62.93 per share. This is one of the three majors in the precious metals royalty and streaming space. Excellent company, outstanding management. The CEO is Randy Smallwood, and he has done an incredible job. His deployment of capital over the years has been absolutely stellar. The stock price has run up quite a bit, so I don't love that. And also, they have way too much asset concentration in their Salobo asset in Brazil. So if something happens to Salobo, that could be disastrous for this company. I mean, they're not going to go bankrupt or anything. They have a really strong balance sheet, and they do have a very diversified revenue stream outside of Salobo, but Salobo makes up a substantial portion of their revenue. So for Wheaton Precious Metals, a very high quality company, but because it's run up in price, I'm going to say buy on weakness. Next up is Metalla Royalty and Streaming, and it trades in the US under the ticker MTA, currently at $2.87 per share. Metalla is super cheap on a price to NAV basis, and I used to be really bullish on this company. And I used to like it a lot, and it used to be one of my top picks. But I've done a lot more research into the company, and I've spent a ton of time thinking about it. And I'm really worried that this company's excessive spending is going to hurt long-term shareholder value. Most of their spending is not on things that will contribute to the growth of the company. Most of the spending is on interest. It's on executive salaries, it's on stock promotion. Now, if they were spending a lot of money, but it was all buying royalty, buying a stream here, buying another royalty over here, well then, hey, I can accept that spending if those royalty purchases seem reasonable. But like, for example, in the trailing 12 months, they have just $5 million in revenue. And in that same 12-month period, Their G&A expenses, their general administrative expenses, is $5.2 million. So just on G&A, they spent more than 100% of their revenue just on G&A. And then in addition to the G&A, they have other operating expenses as well. So if you take their total operating expenses, which doesn't even include their interest expense, their total operating expenses is about double revenue. It's $9.9 million in operating expenses versus $5 million in revenue. And then they also have debt that they're paying interest on. And then in the past 12 months, they've paid $1.9 million in interest. So basically they have almost $12 million in expenses and $5 million in revenue. And after doing more research, I'm also afraid that their timelines for when they think these big royalties are going to come online are not accurate for some of them. And I think it's going to take longer than they're saying. And I'm afraid that their excessive spending is going to hurt long-term shareholder value. And I think the executives are getting paid too much. So my opinion on Metalla has actually changed quite a bit. And in 2025, I'm putting this as a void. Next up is Triple Flag Precious Metals. Trades in the US under the ticker TFPM and is right now at $16.69 per share. Triple Flag has great management. It's very well run. They have a good diversified asset base, but they have this cornerstone asset, which is a silver stream on Cerro Lindo. And Cerro Lindo has a big step down coming. So right now, they're getting 65% of the silver produced at that mine. But after they receive about 19 million ounces, that drops down to 25%. And this is a very important asset for them right now. And when this drop down happens, that's going to decrease the company's GEOs, their gold equivalent ounces, by about 9,000 ounces per year. And I don't think that's going to happen in 2025, but I believe it's going to happen in 2026. And when that happens, I think it's going to surprise the market. Even though we know what's coming, we all know it's coming, I still think the stock price is going to suffer from that. So in 2025, I wouldn't mind buying this with a short-term duration, but I would rather wait to buy Triple Flag until this Cerro Lindo step down happens, because that's going to substantially affect their revenue. So right now, I'm going to put Triple Flag Precious Metals as a wait, because I want to wait for that step down to happen and then maybe buy after I see some share price weakness there. Next up is EMX Royalty. It trades in the US under the ticker EMX and is currently at $1.68 per share. This is another company that my mind has changed a lot on. I used to not be so hot on this company because I thought they were spending way too much money. I thought their G&A was too high. But then I spent a lot of time researching it. I dug way down deep into this company and I came away with a different perspective. Now, just a few years ago, like 4 years ago, they were spending 100% of their revenue on G&A. But now, since then, their G&A has basically stayed flat and the revenue has grown a lot. And now that number is down to about 29% in the trailing 12 months. So I like that's headed in the right direction. And digging into their assets, I think just their royalty on Timok is worth double the market cap today. Just that one royalty. And then they have 5 other cash flowing assets and then like 200 other royalties as well at different stages of exploration and development. So I think you're getting a lot for your money here in EMX. And their Timok royalty just got a whole heck of a lot better because the operator, Zijin, just found a new deposit close by, which appears to be mostly on EMX's royalty boundary, and they're calling this the MG zone. EMX has obtained satellite footage of this MG zone that shows that about 90% of it lies within their royalty boundary. And right now in that satellite footage, you can see 12 drill rigs on EMX's royalty boundary that isn't even included in the current mine plan, that isn't even included in what's being developed right now. So that TMUC asset is going to grow a lot. It's not going to grow a lot just in terms of the current production, because the revenue from that is increasing almost every single quarter, but also it looks like they found another massive deposit. And the way that ZGen works, they are extremely efficient, and the fact that there's 12 drill rigs there right now tells me that they're trying to get this into production as fast as possible. And if you read ZGen's mission statement and what they say in their annual reports and semi-annual reports, is they want to increase copper production as fast as possible and get new mines into production as fast as possible. And they are very, very good at what they do. In terms of the copper producers out there, I think ZGen is probably the single most efficient. So even though they just discovered this MG zone, the fact that it lies right in the shadow of an operating copper mine, a tier 1 copper mine at that, I think this could be bringing additional revenue to EMX in as little as a few years. And when we get more information about how big this MG zone is, and I think it's going to be huge, because ZGen, who's a major operator, is describing it as large and high grade. And for a major to describe something as large and high grade, it's got to be huge. At least that's what I think. So I think there's a lot of value there in TMUC and in that MG zone. But not just that, they also have this really important gold royalty on Gediktepe. And on Gediktepe, they have a 10% royalty on the oxides, and that's bringing them a lot of revenue. And the oxides were set to be depleted in just a couple of years. However, the operator has recently said that they found several new oxide zones, and it looks like they're going to be able to expand the mine life. So that's really great if they can extend the mine life of those oxides. And then EMX owns some other great assets as well. Like I said, this is just a brief overview of this. I have actually gone on too long about EMX, but I think it is really cheap at $1.68, and this is a strong buy for sure. Next up is Franco Nevada, trading in the US under the ticker FNV, currently at $123.53 per share. Franco Nevada is probably the highest quality royalty company in the whole precious metal royalty space. But it's not cheap. Like Wheaton Precious Metals, you have to pay a pretty big premium to NAV to be able to buy this. However, that's NAV based on how analysts calculate it. But these NAVs, especially on these tier 1 mines, they're proven to be horribly wrong. They horribly understate the actual long-term value of these royalties. And that's why they trade at a premium to NAV. It's not that they trade at a big premium to NAV, it's that analysts are calculating the NAV wrong, because analysts don't take into account the increasing gold price over time. Analysts don't take into account the fact that the operators of these large tier 1 mines tend to expand production over time. The analysts don't take into account that the operators find a lot more ounces over time as well, and the analysts don't take into account that technology improves over time, making ounces that aren't economically recoverable today economically viable in the future. So there's those 4 things working to improve the NAV over time, or working to improve the value of the royalty over time, which I think is the major 4 reasons why analysts drastically understate the value of a royalty on a producing tier 1 mine. This is very different if you're talking about a royalty on a mine that isn't yet in production, because a royalty on a mine that never goes into production is worth 0. And with all the hurdles to get a mine into production these days, between funding and ESG and all these studies you have to go through and all these permits you have to get, it is very expensive and takes a long time. And a lot of times, if the community support isn't behind you, or if the government has a different agenda, you're just never going to get that mine built. So a royalty on a producing tier 1 mine is a lot different than a royalty on a non-producing tier 1 mine. They had a big stream on this Cobre Panama copper mine, and this Cobre Panama mine, which was actually their single biggest stream, got shut down by the Panamanian government. Now the value of that is totally wiped out of the stock. So now they basically have a free option on that. I think that's probably going to eventually come back into production, and that's just going to be free upside for this company. And the stock price is still depressed after losing Cobre Panama. So I wouldn't expect as big of returns on Franco Nevada unless we get more news about Cobre Panama coming back into production or signs that it's heading in that direction. But I'm going to give Franco Nevada a buy or a strong buy. And if I were running a hedge fund, for example, and I had $100 million to invest or $500 million to invest or even $1 billion, this is the company I would buy because it's one of the biggest companies on here. It has a ton of liquidity, very, very high quality company. Just don't expect the same kind of returns that you might expect from one of these other smaller companies, but I think it's going to be a pretty safe bet with solid returns over time. Next up is Altius Minerals. It trades in the US under the ticker ATUSF and is currently $18.61 per share. Altius, in my opinion, is one of the highest quality companies in the entire natural resource space. It's not a huge company. It's a market cap of less than $1 billion, but their management is highly intelligent, they act counter-cyclically, and they've proven to be very, very, very good at deploying capital. If I had to put my entire net worth into one company and I couldn't have internet access for 10 years and I just went sailing around the world without internet access, I would put that into Altius Minerals, knowing that my money would be in great hands for the next decade. This is a very solid long-term hold, and I usually wouldn't consider this any kind of short-term investment. However, right now, they have a couple things that could happen to really propel the stock price in the near future, in 2025, for example. One is they have a pending arbitration with AngloGold Ashanti, and this is in regards to their royalty, their 1.5% royalty on the expanded Silicon gold project in Nevada. This is probably the most important gold discovery of the last decade, and they have a pretty substantial royalty on this. And this royalty, I think, is worth a lot of money. My calculations put the value of this royalty right now at between $500 and $700 million. That is almost the entire market cap of Altius. And I think that's going to be the sales price. Altius is more focused on base metals and battery metals and potash, for example, also high quality iron ore, than they are on gold. But they acquired this royalty as part of their project generation portfolio. So they generated this royalty, they didn't buy it. And this gold deposit in Nevada is growing really, really fast. But anyway, back to this arbitration. Right now, they have their royalty area of interest that's a space like this, right? Okay, so it's big, but it's not huge. And they think that their royalty area of interest isn't supposed to be like this, but it's supposed to be like this, way bigger than where it's currently at. So they're in arbitration with AngloGold Ashanti to determine that size of their area of interest. Their area of interest will include the Silicon and Merlin deposits, which is where most of that gold is currently located. However, if they win this arbitration, their area of interest is going to cover a much, much larger area. And they want to sell this royalty because they think they're going to get more value by selling it and probably buying more base metals royalties, or perhaps trading the royalty to another royalty company in exchange for an equivalent base metals royalty, because they don't have the big premiums to NAV like some of these other companies do, like Wheaton Precious Metals or Franco Nevada. Altius gets no premium at all, even though they're a great company. So they're going to sell this royalty after the results of this arbitration, and the results of this arbitration could come in any day now. And after we get the results of this, they're giving companies 3 weeks to submit their final bids. So this is something that could happen pretty darn quickly. And if they do in fact sell this royalty for somewhere in my estimate of between $500 million to $700 million, that is going to do very good things for the share price in a short period of time. And also something else that could happen in the near future is their CAMI royalty. They have this huge royalty on this high-grade iron ore project that's being advanced by Champion Iron. And that's in Canada, and high-purity iron ore is considered a critical mineral in Canada. So because of that, CAMI may be able to get lower-cost funding to be able to build that. And they're actually searching for a partner for that as well. And if that were to go in production overnight, that would become by far Altius's largest royalty. But anyway, I could say a whole lot more about Altius, and I should do a deep dive into Altius because I know the company inside and out. But I am giving this a strong buy for sure in 2025. Even though this would usually be a longer term investment for me, it has some near-term catalysts that I think could play out very quickly and really propel the share price higher. By the way, if you like my work, I have a newsletter in which I tell you what I'm doing with my own money, and I give you that information before I buy or sell, and you always know my reasoning behind my decisions. And I'm doing this full time. I'm spending 200 hours a month or more researching mining stocks. If that sounds like something that interests you, go to miningstockmonkey.com/products/VIP or click on this link right here and that'll take you right there. You can try it out risk-free for 30 days. I offer a 30-day money-back guarantee, so there's absolutely no risk to you. Again, miningstockmonkey.com/products/VIP. And last on my list is Sandstorm. It trades in the US under the ticker SAND, and currently it's at $5.77 per share. This is one of the mid-tier royalty and streaming companies. Great company, highly diversified. It's going to grow a lot in the coming years, like the coming 3, 4, 5, 6 years. And importantly, very importantly, this is growth that I think is pretty darn certain. There's a lot of companies that say they have growth, but I have a lot of doubt sometimes about whether, when, or if those mines will actually come into production. But with these 4 major royalties and streams that Sandstorm has in development, I think those will almost certainly be in production all by 2030. So I don't know how great of a play Sandstorm is in 2025, but if you have a little bit longer time horizon, I would buy Sandstorm with a 5 or 6 year time horizon. But anyway, I just did a deep dive into Sandstorm, literally released the video like 2 days ago. So instead of me going in depth in this video, I think you should click on that video next. I'm not going to write it down, but Sandstorm's a strong buy for me. So if you want to see that deep dive into Sandstorm, click on this video right here. And if you want to get access to my very best research for just $15 a month, sign up to my newsletter right here.